As we entered the last couple of months of 2022, people started to see interest rates declining for mortgages, and a lot of people thought, whoa, wait a minute, this is great. The housing market's going to recover and interest rates are going to continue to go down. Maybe it's time to jump back in and buy. Not so fast, guys. Now that it's 2023, interest rates are headed back up. And that should come as no surprise because in all reality, the interest rates are going to continue to rise at least through the first half of this year. And that's mainly due to the Fed increasing their federal funds rate, and they're set to do that once again in February. The first week of 2023, if you're looking at getting a 30-year mortgage, the average 30-year rate right now is 6.87%. 15-year mortgages are a little bit better at 5.95%. And if you need a jumbo loan, you're buying a luxury property, that's higher than all of them at 6.93%. So now that interest rates are creeping back up and likely will continue to do so over the next 6 months, where do you guys think home prices are headed? Well, we already saw during the second half of 2022, home prices fall by 10%. And one thing that people talk about a lot is institutional investors and what type of effect they've had on the housing market. And a lot of people have said that institutional investors are just sitting on the sidelines waiting to scoop up property. And there is some truth to that. In fact, there was an article today talking about how all investors, not just institutional, but also mom and pop investors, have largely taken a back seat to investing in real estate. Before we go any further into that, let's take a step back and just look at what happened when we had all this investor demand for housing over the past couple of years. Because so many homes were purchased for investment throughout 2021 and 2022, it drove home prices higher than ever before. That combined with ultra low interest rates, making it easier for anyone looking to buy to get into a home. Now, one of the housing directors at Yield Street, which is an institutional investment firm, they're a small one though, they only own about 600 homes nationwide. He said that he believes that home prices are going to fall an additional 10 to 15% from where they've already fallen. And that's just in 2023, guys. So if he's correct, that's going to put 2023 at a 20 to 25% home price decline by the end of the year. Now, according to Yield Street, their investment strategy is basically going to be this. They're going to be waiting it out throughout 2023 to see when they think home prices might hit bottom, and then they plan on jumping back into the market. Now, it's a lot of leaves. The interesting thing about that statement is I don't think it's very likely that the housing market will see a bottom in 2023, at least assuming things keep going in this direction. The Fed continues with their rate hikes for the first half of 2023. We enter into what everybody would consider an unofficial recession. We start seeing unemployment go up. All of these things have a delayed effect on the housing market. And so expecting the market to bottom already in 2023, I think is highly unlikely. Now, I do think by the end of the year, we will see home prices considerably lower than they are now, but it might not be at the bottom, guys. But one thing that Yield Street mentioned, which I believe is very smart and something to look at, is which areas have the most new construction going on, because those areas combined with pandemic boom towns are going to be the areas that are most likely to see the biggest drops in home prices. It seems like almost every property I encounter on my walks is some sort of get-rich-quick scheme. This is the latest one here. They bought this property back in March of 2021 for $975,000. Fast forward to today, they're asking $3,150,000. And one of the main reasons that areas that have a lot of new construction are likely to see some of the biggest price declines are for a couple reasons. One, these home builders need to offload these properties, guys, because one thing a lot of people don't realize is home builders are not all that different from home flippers in the sense that the longer they hold on to the property, the more money they are set to lose, because home builders borrow money to build their homes, and they also have floating debt, which is very similar to an adjustable rate mortgage. As their floating debt rates have gone up in the recent months, they're even more in a pinch to offload these properties sooner than later, because every month that goes by that they're hanging on to homes that are built that are not sold, they're losing money, okay? So that's one thing. These guys need to unload those properties for financial reasons. The second thing is that in an area where you have a lot of new construction, what else do you have happening? You have the inventory increasing. On top of the regular resale properties, you're having a lot of new construction properties hit the market, and the more inventory that's available and the lower buyer demand is, then the lower prices need to go in order to meet that demand. Because one thing people ask me all the time here on the channel is, Michael, what's going to happen in Florida? You know, because I see all the prices just continuing to go up in different areas. Well, look at the area in Florida that you guys are interested in and take a look around. Is there a lot of new construction happening in that area? Like, I can tell you for sure, up near the Treasure Coast by Palm Bay in that area, there's a lot of new construction properties. You can go up to the Jacksonville and St. Johns County. There's a lot of new construction happening over there. You can go over to Orlando. There's a lot of new construction happening there. Southwest Florida, certain parts of Southwest Florida have a lot of new construction happening as well. Now, that doesn't mean that prices are going to fall 40% in those areas, but at the very least, it's going to help alleviate prices and bring them down, and you'll have more inventory to choose from in those markets. But you know, you come to a place like here in Miami where I live, guys, there's like no new construction. All the new construction you guys see are people tearing down these old houses and building a brand new one that costs 5 times as much. That's the kind of new construction we got going on here, that along with residential high-rises that are just ungodly expensive, you know? Really, you want to be looking in areas where there's a lot of new construction coming if you want to try and find a good deal, because that's where you're most likely to find it. And like I said a minute ago, these builders want to offload these properties. So this is where you can most likely make a great deal with a home builder that will get you into a brand new property, and it'll come with the home builder warranty, and at least you'll have the peace of mind knowing that you got the best deal that you can get today. Now, I'm not saying that you should go out and buy today, but people are always going to continue to buy. People are always going to continue to sell, regardless of what the housing market is doing. And if you want the best chance at the best deal, these areas where you see a lot of new construction happening are probably going to be your best bet into 2023. Now, I also saw this interesting story today from this real estate investor couple, and they own about $19 million worth of real estate. So whether you want to call them mom and pop or big time is kind of up for discussion, but I would say they're definitely way ahead of most real estate investors. So I wouldn't exactly call them mom and pop. They seem to be more on the higher end. I mean, these guys are making $400,000 a year off their real estate portfolio. So that's pretty good. But here's what they have to say about the housing market, which I thought was fascinating and should make everyone who hears this think a little bit. They said that as rates begin to trend down, right, which they're still going up, by the way, as we just talked about that earlier in the video. So as rates begin to trend down, so will home prices. Now, why is that? Why would home prices continue to go down when they reverse and the rates start to go down? At first glance, makes no sense, but let's look a little further. Their reasoning for this is as homeowners start feeling the 2023 recessionary squeeze on their household budget, that a lot of people will likely look to liquidate their home in order to get that equity before it's too late. They also said that in 2023, they expect home builders and flippers to be looking to fire sale a lot of their properties while they still can as well. Because this is kind of one of these situations where everyone's looking to get out all at once. You know, that's where things are headed with this. And since these people are professional real estate investors, they say that they're already seeing people get discounts from home builders and flippers and people like this that are just looking to get out of the property right now. And they think that 2023 is going to be a great year to buy 1 to 4 unit multifamily investment properties. And I've always liked multifamily for a few different reasons, guys, because multifamily, let's say you have a vacancy on one unit, you have a duplex, one unit goes vacant, all right? And then you still have the other unit rented. So at least the property is not losing all of its income right off the bat as soon as there's a vacancy. So you have one unit at least rented while you're looking for a tenant on the other. It helps reduce the expenses on the property when it comes to that, if you ask me. Versus a single family, as soon as the unit's vacant, your income goes from whatever you were renting it for down to zero. So I like multifamily for that reason. And I owned a multifamily a couple years ago, but I decided to sell it. Even though it was a great investment, I made money on it when we sold it, and the property used to bring in a lot of cash flow. But the issue with that property was there was just too many problems. You know, it was an old house, it was a duplex, and you know, when homes get to be like 100 years old, there's just all kinds of problems that start coming up on a regular basis. And I just didn't want to deal with the headache anymore. So we sold it and got out of it for that reason. But like I said, it ended up being a good investment overall, still made money on the place, and I don't regret buying it. And I think when you're investing in real estate, every single transaction is a learning experience. And I can tell you from the experience on that one that my number one takeaway is I'll never buy a house that's 100 years old ever again. Now, this real estate investor couple also thinks there's going to be a lot of opportunity in the pandemic boom towns, because now that the boom is over, here comes the bust. You can look at places like Las Vegas and Phoenix, Arizona, and different parts of Texas that saw a huge amount of people move in during the pandemic, and the prices just went parabolic, you know? And because they went up so high, they're set to fall a lot as well. And this could happen here in Florida too, guys. There's a lot of investor activity here in Florida, and we had this huge pandemic rush of people moving here as well. So it is possible that it could happen. And by the way, even if you're not a real estate investor and you're just looking to buy a home somewhere, a lot of this can still apply to you if you want to maximize the amount of appreciation that you might get on your property into the future. If you're a move-up seller that likes to buy a new house every 5 years and sell the previous home for a profit, move up to a new home, you could be looking in markets like this as well. They also say to look in places that are emerging markets where the big box retailers are putting in new stores. Is there a new Target going in? Is there a new Walmart going in? Is there a new airport being built in the area? These are the type of things that they say to be on the lookout for to determine if you're going to be able to see a big uptick in home equity over the next decade or so. So overall, I think a lot of this is pretty good advice. Now, speaking of the pandemic boom areas, I saw an interesting article as well about how the bulk of the people have already made their move, you know, during the pandemic and all this, that areas like Florida and Texas and Arizona are still seeing large influx of population, specifically from other states. Texas and Florida make up only about 15% of the entire population in the United States. But in 2022, those two states alone accounted for 70% of the US population growth, which is kind of insane. Just between two states, Texas and Florida, guys, that's it. They say that the US population as a whole grew by 1.2 million between July 2021 and July 2022, but about 1 million of that was just due to immigration alone. So only 200,000 was due to, you know, new Americans being born in this country, essentially, which is very low. And where are all these people moving from? Where are they all coming from? Well, glad you asked. California is the biggest one, and a lot of them are moving to Texas. California, they lost 343,000 people in 2022. New York, they lost 299,000. Illinois, they lost 141,000. And when you contrast that with the population gain in the states that are gaining, look at this, guys. Florida gained 318,000 new residents. Texas gained 230,000 new residents. North Carolina gained 99,000 new residents. South Carolina, 84,000. Tennessee, 81,000. Arizona, 70,000. So it turns out that even though the worst of the pandemic seems to be over, people still want to move to these areas, even though people want to get away from the high tax states. People want to get away from the out of control homeless situation that's happening in Seattle, in Portland, in Denver, and families don't want to raise their kids in these neighborhoods because it's basically unsafe. And the way that all this ties into the housing market is when you look at places that people are leaving versus places people are moving in, You know, it's very likely that these places that are losing residents are going to see further drops in home prices, and the places that are gaining new residents are probably going to be held up a little bit better than the states that are losing, especially because it's not just housing that wins when it comes to this. It turns out businesses in these states that are growing are also flourishing. In these states where they had the biggest lockdowns, like California and Illinois and New York, for example, all their employment numbers are down below pre-pandemic levels, guys. Like California's down 0.5%, Illinois is down 0.7%, New York's down 2.8% in terms of the amount of available jobs in these areas, because a lot of places just went out of business, okay? And then when you contrast that against the states that people fled to, you know, Idaho, their employment numbers are up 7%, Utah is up 6.7%, Texas is up 5.6%, Florida's up 5.5%. Georgia's up 3.6%. Arizona's up 3.8%. So you guys get the idea. When you have an area that is growing in population and people have work and the wages, that's a really important one. Don't forget that one. The wages still make sense compared to what home values are in the area. That is setting it up to be a very robust housing market, regardless of what's happening in the overall economy, because if the local economy is flourishing, that's still going to be a win for that area. And what this all boils down to is the same thing, guys. No matter how hard this economy comes crashing down or the housing market crashes, it's going to affect different areas differently. You know, if you're already living in an economically depressed area that is seeing businesses close by the day or by the month, and there's no jobs, and you're starting to see abandoned properties, that's probably a pretty good sign that that area is going to get crushed during this recession, okay? Because they're already getting crushed. But when you look at areas that are flourishing, it's going to take a very severe recession, if not a depression, to bring down areas that are just flourishing right now, because things are going so well. And when things are going well, it takes some pretty significant blows to the local economy to really bring things down. And I want to give you guys a quick story on this and my personal example. Like, I moved to Miami in January 2008, right as all the markets were starting to crash back then, right at the beginning of the last Great Recession. And one thing that I noticed that I still remember is, even though Miami had a huge housing market crash, the local economy here was still doing pretty well, if you ask me. Now, that was 15 years ago, so I'm going based on just memory here. But I remember when I first moved here, even back then, I had no problem getting a job, and I got fired from that job, got another job right away. I had no problem, you know, making enough money to live in this area, versus when I looked back home where I used to live in Illinois, everything was continually getting worse. And it seemed like here in Miami, even though there was a nationwide recession happening, it wasn't readily visible. You know, you go down the Lincoln Road, there was still, places were packed, restaurants were bustling everywhere. And, you know, it seemed like besides the home prices taking a huge haircut here, everything else seemed to go pretty well. And that's another lesson going into this recession, is that just because the housing market could take a huge nosedive doesn't mean that the local economy will follow. In fact, the local housing market taking a nosedive is going to be a healthy thing in the long run for everyone, because it just makes it more affordable for people to live and work in the area. I would argue that high housing prices are bad for the local economy, because it makes it harder for businesses to stay open, guys. You can't have people commuting an hour one way to work. Nobody's going to want to work in that area, and businesses are going to close. And businesses also can't afford to pay people the wages that they need in order to continue working at places where the housing prices are too high. So overall, housing prices coming down is a great thing, if you ask me. And just watch out for all the opportunity that could be coming during this recession, because I can guarantee you there's going to be a lot of it. If you guys enjoyed this video, make sure you hit the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next video on the screen right over here, and I'll see you in the next one.